Thursday, October 11th, 2018, Monaco 64, home of alternative economics and contrarian views. Very interesting day yesterday. Huge point drop in the Dow, but if you look at the percentage drop, it's not even in the top 20 biggest percentage drops. Does that mean things are fine? Not really, in my opinion. I think this could be just a warm-up to a much bigger change in the financial markets, financial system. After 35 plus years of financialization of the world economy, decreasing interest rates, ever-rising debts, we could be at the beginning of the opposite, which would be very different for the general public, especially for those my age, a little younger, a little older, who have lived most of their adult lives in a very comfortable situation, in my opinion, with very easy money, with access to very easy credit. I think it's a much bigger thing we're going to go through. Can I predict what the markets are going to do exactly? No, but I can predict that the past actions that we've had and that the system has performed in the last since the early 80s is changing around, and the tide has turned. And like I said in previous videos about the bond market, it looks like interest rates have definitely, the trend has changed, and we're definitely in an environment of not easy money anymore, and that's going to be hugely difficult for the fiat money system that we have had since 1971. I'll look at what we're doing this morning. I want to look at why I think yesterday was just a bit of a picnic in the park. Things could get even worse. Percentage-wise, it was only a 3% drop, and that's really nothing compared to historic norms. The only reason it seems so high, such a bad drop, is because of the point drop. So it's 8:20 a.m. London time. So this morning, spot gold is 11.97. So up $2. So gold and silver didn't do great yesterday, but gold actually traded up, and silver was basically slightly down to unchanged. So they performed well, and I will talk later after I looked at the markets at the Dow gold ratio as well, because it looks quite interesting at the moment. So gold is right near the highs now, 11.9750. So up a little bit. Silver's up 8 cents, so up 0.5%, 14.37. While the Dow future right now is at 25,420. So it's down 188. It has been as far down as 25,175, or down about 350. After it dropped 831, almost 832 points yesterday. So it's down another almost 200 at the moment, down 0.75%. S&P futures down 19, or 0.2% at 27.70. Has been as far down as 27.44. And the NASDAQ 100 futures trading at 7,003. It's down 50, another 2/3. And the low has been 69.04. The dollar was weak yesterday, most of the day, which is a bit unusual. Usually when you have stock markets getting hit hard, the dollar performs better, but it didn't. Right now, pound is 132, the figure, up 10 pips. Euro's at 115.48, up 0.25%. And the dollar is down towards, the dollar's trading lower against the yen here. It's at 112.27. That's a sign that people are closing out carry trades. And what are carry trades? For those of you who might not have heard of it, well, it's when investors borrow in low interest rate or zero interest rate currencies like the Japanese yen or Swiss franc. And to borrow, they sell that currency, and then they buy assets in their currencies like stocks, bonds. And if assets start going down, what they do is they sell those assets and they buy back, or pay back the currency that they borrowed, and that's why the yen is going up. That's a sign of that the markets are, uncertain, and there's a lot of worries in the market. The carry trade. Crude oil, of course, came off yesterday with the drop in the stock market. The WTI is at 72.50, down about almost 1%. Brent is still, 82. It's down 0.8%. Yes, we're off the highs, but still fairly elevated levels. Dollar is down against the yuan a little bit. Chinese yuan is at 692. What else? The So let's look at the bond market. Yesterday, because I spoke a few days ago how we needed to keep an eye on the bond market, that it would set the tone for the whole financial system. And it looks like it is. Yesterday, the 10-year yield stayed quite elevated, even while the stock market was dropping. But it did drop towards the end of the day as the drop accelerated and got even bigger. When the Dow was down about 200, 300, actually the 10-year yield was slightly higher, at around 323, 322. But then people did buy treasuries as the market really dumped towards the end of the day, and the yields dropped to 316, which is still above the previous high this year of 312. So yields are still elevated. Is it possible that the bond markets are going to do well if the stock market continues to implode or drop? Possible. Does that mean that bonds are a good buy? I personally don't think so. I would stay out of paper assets. I think this is the beginning of a much bigger shift, as I said earlier. Just quickly before I go into that, Italy, so how we're doing in Italy, aside from the problems in the US stock market, is Italy as well to look at. Well, their yield is starting to move up. It's at 355, so up 4. So nothing really solved there. What about the I said I think we're in the beginning of a big shift, and will it take 36, 37 years like the last bull market in financial paper assets? Well, no, I think the corrections of cycles like that could last not as long, and it could be a total rebalancing. It could be very quick. It takes longer for things to go up, but when they come down, it's much quicker, mostly because of leverage. So what do I mean by this rebalancing? Well, I think for example, when I put the yield page on Bloomberg, to look at where the markets are, I get this little screen from Bloomberg TV, and they've got all these different people, fund managers, traders, analysts. I think the world has gotten too much, and I was part of this. I worked in the city for over 20 years, but I think there's a bubble in money managers, hedge fund managers, analysts, private equity. I think we are this in 5-10 years time. All these people are probably going to have to be doing something else, or they're going to be a lot less of them. I think it's an industry that is only there because of what happened in '08. As we know, nothing was fixed in '08. And that's the other problem. The Fed talks as if everything was fixed, as if the economy is doing great. So does President Trump. And when they start trying to normalize interest rates, this is what happens. Well, it's because, and a lot of people are going to be taken by surprise, because we're supposedly in the best economy in 50 years, the lowest unemployment ever. But then when the Fed starts raising rates just above 2%, which is a historically very low rate, this happens. It doesn't surprise me. It shouldn't surprise you if you've been listening to me for the last 2 years, or even 2.5 years or so. But a lot of people are going to be shocked, I think, with what's going to happen. If the economy was doing really great, if it wasn't an economy based, with the foundation of sand or credit, easy credit as it is, interest rates right now should be 5, 6, 7%, on the longer end. Fed funds should be 4.5, 5, maybe 6. This is not normal. And what I think will happen is in the rebalancing, commodities and precious metals, they might not even go up that much, but what I think will happen is a total evisceration, or a total, like a huge haircut. They're going to almost shave the head of the paper market of financialization, and it's going to be amazing to look at. But the economy needs this. It's almost like if you had a house and you had too much ivy growing on the house, and it started growing on the roof, and the house was covered with ivy bushes. You have to take it off, or else it's not it's not good for your house. And this is what the economy has become like. We've become totally consumed by paper. They don't really produce anything that's how can I say, beneficial to society. On Wall Street, in Frankfurt, City of London, even Paris, what they do is they shuffle paper around for profit and with leverage, and that's why there's such a huge industry, and that's why it's the only place that's doing well, while the rest of the real world, the 99.9%, it's even less, are struggling. The economy needs to rebalance. It's not sustainable, and this is what, in my opinion, we're going to see. And I even think the bond markets are going to have a hard time. Right now, people might still believe in flight to safety, but I'm not too sure. So I saw that President Trump is trying to, put the blame on Jay Powell. I saw a story. He came out on CNBC and said that the Fed has gone crazy. Well, he thought the interest rates were too low when he was campaigning. He said it was an ugly bubble, didn't he? And now with the Dow at 26, 25, he says it's because it's a great economy. But yeah, he's just trying to pass the blame onto the Fed. I would blame the Fed more for this, but I would blame, the system, this fiat money system and central banking as well, where people expect a few bureaucrats, a few people to know where interest rates should be, and these same people to be able to create money and credit out of thin air. That's what it is. It's not Jay Powell in particular. But is the Fed doing this on purpose? Or you could say they are. It happened very regularly, almost every 10 years. But you could also say that maybe they truly believe that the economy is doing great, and that they need to do this. Maybe they don't see that their great economy is like a charade, and that by raising rates they're actually going to kill whatever economy they have. I don't know. Interesting days ahead. Interesting month of October. I personally think this was just a warm-up. Of course, points-wise, yesterday's drop was the third biggest ever. The top two were earlier this year on February 5th and February 8th. There were over 1,000-point drops. But percentage-wise, the biggest drop was in 1987, 22.6% in one day. The second one was October 28th, 1929, 12.8%. And all the other ones are in 1929, the third and fourth. The fifth biggest was in 1899, an 8.7% drop. So at number 20 was a drop in 1914 at 6.91%. So the drop yesterday of 3.15% is just a bit of a picnic in the park for now. We'll have to wait and see if things get more interesting. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. I'll talk to you later. Take care. Bye.